It's worth still holding on to gains about 9.5%. Just wanted to check on the Z Group stocks once again. You've got Z Entertainment starting up on the positive side, so is Dish TV. Some of this continues. Yes Bank, by the way, is up about 3%. Yes Bank also has a fair amount of exposure to the telecom space, so that is one stock that seems to be benefiting for the time being. On the mid-cap screen, apart from that, I mean, Lakshmi Organic, not quite sure what the deal is, but it seems to open on a 5% circuit every day over here. So those are some of the names. Minda, of course, is now piling on more momentum, 6% on Minda Industries. Overall, the market's holding up, Nifty around 50 points higher. So Anuj, I mean, how do you look at the opening? Once again today, there's a lot of participation. Like you said, I mean, SBI itself is helping the Bank Nifty power through. ITC is moving today. You know, lo behold, one of those mornings when ITC is in your top 5 Nifty list. So your thoughts? The momentum seems to be intact for now?
Oh, absolutely, momentum is intact. And, you know, once again, look at the mid-cap IT stocks and the kind of move that some of these stocks are seeing. It's, I think, just relentless. The way some of these stocks are just moving one way, and a couple of other stocks where we're seeing some moves. One is InfoEdge, that's opening up with a bit of a gain. But I think the stock that I'm tracking right now is IEX. The exchange stocks, they have done well. Over the last couple of days, there was some consolidation, but right now there's a bit of a massive breakaway gap, which you can witness on both InfoEdge and IEX as well. There it is, as you can see on the screen. So just keep an eye on some of these new age stocks. Mitessh, your thoughts on the market opening?
So much better than expected opening, and as I said, I think with the breakout yesterday, I think the morning SGX Nifty showing a mild negative sign wasn't a big worry. I think we would still look for targets of around 17,640, and with today's opening, I think yesterday hourly low of 17,510 becomes your trailing stop loss. So maintain a positive bias. Having said that, I think early in the morning, as you were highlighting, a lot of banking names come into the picture. We've had buy calls on IndusInd Bank. I think morning I had a call on Punjab National Bank. I think Bank of Baroda also is a trading opportunity. It can be bought with a stop at about 79.90 or just below 80, and look for a target of around 84, maybe even 87 on the upside.
About IEX once again, in fact, tick by tick chart on IEX, that's the one stock which is you're seeing some bit of momentum now. Any thoughts on this one, IEX or MCX? Any of these stocks, Mitessh?
See, IEX, Anuj, we've covered that earlier as well. I think maintain a positive bias. I've talked about targets of around 600. I think those have been now captured, and the stock still looks strong. So as long as I think 597 can be taken as a fresh trailing stop loss, and I think 645 could be the target over here. MCX is, on the other hand, a very interesting one. I think it had a good rally from 1440 to 1660. It's giving a pullback. If it comes down to around 1580, I would be an aggressive buyer over there with a stop of about 1% or so.
Okay, Mitessh, we'll leave it there today. Thanks a lot for joining us. We'll come back to you around 10 a.m. to revisit some trades. Ajay Srivastava is joining us, CEO of Dimensions Corporate Financial Services. Ajay, good morning. So, I'm just trying to recall if 2003 to 7 phase was better for the market, or this phase is better, in terms of the kind of momentum, the parabola move that we are seeing in a lot of stocks. But your thoughts on how to approach this market incrementally now?
I think, if you ask me personally, that this phase is much better. And the reason being that we have got a lot of new names being added on in this market. And that's the beauty, that the depth of the market is going up, your choices are going up, you have new age stocks coming in, you have old age stocks doing well, or normal chemical stocks also doing well, you've got a real estate company coming in. So, this phase of the market, I don't think we have ever seen, is the kind of new companies coming in, taking up a lot of liquidity, but still keeping the old secondary market intact. I think it's a new phenomenon. We got to adjust to it, that we've never seen so many new issues coming in. And investors need to be wary, because the first 2-3 months, the liquidity in the new issues is much smaller, and therefore you can trade up and down the stock as you deem fit as a few operators. But I think by and large, I think this is much better. And the reason much better is more retail participation, people have made money, and the best part, mid-caps have finally performed, because that was a big bugbear for Indian investor. Was their whole investment in small and mid-cap was under the water. They were losing a lot of money, and that's come back for them. So I think in greatly positive from many perspectives, this rally compared to the earlier one.
Okay, never seen this kind of a rally before. I think you're not the first one to say that. Almost every other day, market observers tell us that in their 2, 3, 4 decade-long careers, they've never seen this kind of a move. I don't know whether one should be worried, but anyway, where everyone's sort of, riding the wave. Ajay, hi, good morning. I wanted your thoughts on how to approach IT now, because almost every IT company is telling us that the deal sizes have gone up. And as we know, the world is moving more digital. There's a lot more AI, a lot more cloud computing. So, these companies are getting bigger opportunities. The pie is becoming bigger. Do you think these valuations are then justified, the 30, 40 times PE that is being ascribed to many of these mid-cap IT names, and how do you approach it?
Well, there is certain amount of caution. No, mid-cap is one space on IT which I think warrants a little bit of caution. I know there is there's a rush of money into the stocks. Whether they will capture the same glories as the big mega guys, I am not so sure about that one. Having said that, the story is intact because right now our IT companies are primarily focused on America. If you look at the distribution, 60% America or 70%, depending on which company you kind of look at it. They still haven't explored the rest of the world, and rest of the world still has to catch up with the whole of Europe, the whole of Asia, the African continent. There are still boundaries which are still not even touched by the technology revolution. And who are the companies going to go there? These are the very same 5, 6, 10 companies in the world going to go there. So just looking at a longer term perspective, one can argue that the 40p is good or bad because Indian companies by and large are subject to rupee dollar variation. But it's a safe haven for investors because two things are very important in these companies. One, no fresh capital is issued in these companies. Number two, buybacks and dividend policies are very, very aggressive. And therefore, you will keep getting cash back as an investor. So even if growth is not so high, you will keep getting cash flow back as an investor. So I think just on a pure the structure of the industry, which is a cash flow generator and it returns back to the shareholders, unlike ITC, for example, which just guzzled up and all kind of stuff. That is what differentiates this industry. And there are no boundaries at this point of time. The world has just only America has come closer to it. You saw the fiasco in Indian banking industry. You see what's happening in income tax department, technology upgradation move. This is just the beginning for the opportunities for this company. So I think longer term, you are safe. Good part, you'll keep getting your money back. They won't invest in useless hotels.
Okay, got that. ITC is actually on the move today. I mean, as I say, the only reason I'm constantly looking at it and talking about it is because you don't get to do that. You don't associate the word momentum with ITC, but that's exactly what the stock seems to be doing. Ajay, good morning. Okay, so let's get you in on this biggest talking point of the last 24 hours. That's Telecom and who will survive and who will not. But my question is very simple. At 7:50, are you too late to make the connect with Bharti, or should you still do that?
Surbhi, I asked this. I have many families ask me this question as from the stock market, etc. I said, what do you do if you were born today, or you just join the, you got a first job today, and you start your investment cycle today. History is gone. Today, if you were coming into the market and you got a first paycheck and you want to invest, you need to buy some stocks, right? Or mutual fund, whatever it is. So I think past history is gone. At 750, if you think Airtel, I think it's a great story. Personally, I own the stock. I think it's a great story. And the reason being the story is that you cannot wish away telecom from our lives today. You go to anywhere in this country, and this is Bazaar, everybody's on this little phone 24 hours a day, on the dining table, restaurants, everywhere. And therefore, the top two companies in this country will gain momentum, will earn money, and the price increase is just starting to take place. So forget the past. I think if you need to buy stocks in this country, you cannot not buy the companies which connect India. And whether we like it or not, between Jio and Airtel, they divide the pie in terms of connecting India. So my view is ignore what you see, the charts, ignore the percentage increase, buy into the stock. Yes, sure, the price may come down eventually. It does. Market always gives you opportunities. Prices do come down. The market's correct, but that gives you opportunity to buy more. But just on the basis as reach 750, I think that's not the way to say we should not buy it. And unfortunately, we've been older. There's a lot more younger people sitting there. So, well, as I keep saying, markets get a new high every time. That doesn't mean markets, you don't need to buy the market. And it's organic. We all age. And reminding of age, I think all of us know, at least some of the participants know that let me call out to Steffi, have a very happy birthday. I think she collaborates. You guys have done it so well. So let me call her wherever she is. Have a great birthday. And unfortunately, and fortunately, it's a new hire for you as well.
Oh yes, it is, and you know what, Steffi is a rock star for us, and Ajay, thanks a lot for her wishes, for wishes for her. I'm sure she is listening, and of course, she does a lot of work to put this show together. Ajay, now let's talk about a couple of other stocks. The original disruptor which got disrupted, Z Entertainment. How have you read into this whole news flow, and how would you approach the stock now?
Yeah, when the guru has spoken, lesser mortals have to follow the path. Let's be honest. The guru has put his money on the line. The Indian guru has put the money on the line. You need to follow the path. And the path is very clear. The path is very clear that this company is going to give up its legacy status, the legacy control, whether it is now or in a 3 months or 6 months time frame. That is very clear about it. Now, the question is whether the momentum continues in the earnings side. And that's where I have a doubt that given the whole clutter in the space of OTTs, programs, channels, entertainment mediums, cinema going to come back, whether they will keep getting the pie that they got for advertising. And that's where I have a doubt. And therefore, I'm not a buyer in this share. But of course, there was an opportunistic buying taking place. But I doubt that it'll ever regain its momentum in terms of the share of the advertising pie. And given the amount of stuff happening on the net and everything put together, will it ever kind of get that momentum on advertising on television serials? I have my doubts about it. I may be surprised. I've been surprised many times, but it's certainly not in my top picks to buy.
Okay, well, Ajay, I wanted to ask you about some of these, new age companies, these technology names. I mean, whether it's something like a Nazara Tech or even, what's happening with Zomato. I know we've discussed it plenty of times in the past, but people resigning or not, these are businesses that continue to move up and grow. What do you see as the future here? And is it too late to get in, or do you see more scope?
Okay, one part. People resigning is a good thing because that's get fresh blood. Now, whatever reason, I don't know why anybody resigns, why the Zomato co-founder resigned, but that's all right. The need for new leadership comes in place. The new blood always is good. And I'm a firm believer of that people should be replaced at the end of the 5, 7, 10-year cycle. That's very important. It does well. Look at Infosys. The new leadership, look at from where it came in and where it has taken to. So I think you should look at positively. Now, the question is, how do you value some of these companies? Should you buy these companies or not? Again, same point at the end of the day. We can sit out and wait for a correction, and we'll never know when the correction comes. And if it comes, are you too scared at that moment to buy? I am in a theory that if you like a thing and you like the new themes, we like the new themes, that's the way India world is going to work. You buy a certain percentage and hold some cash with you. If you think you got a correction and corrections do come, buy the rest. Not buying gig economy stocks could be ruinous for your portfolio. Can you imagine in the US if you had still stuck to GE? Remember the guy, famous management school of GE? That would have been disastrous for your portfolio. So embrace the new, embrace thing. It comes with risk, it comes with uncertainties, but keep that little money on the side that when there is a chance to buy cheaper, you are there in the market, not fully invested. In this market, it is very wise to have 10 to 20% of your money in cash because you will get opportunities to buy locally. So embrace it with open arms, buy everything you can. India has only 5, 6 stocks. It's not that India has got 10 of them. Maybe even next year, we'll have 20 of them. But at least 5, 6 you can certainly buy, right?
Okay, well, that's sound advice and we'll take it. Absolutely, Ajay. Always a pleasure having you on the show. Thank you for making time and joining in.